Good afternoon, everyone. My name is Patrick. I'm the Corporate Development Officer of Medusa Mining. I actually only joined the company about 3 months ago, so don't give me a hard time. Previously, I was a sell-side analyst for about 8 years, and today I've structured the presentation slightly differently. I'd like to highlight a number of things that's interesting from an ex-analyst perspective. To keep you entertained, I've prepared a number of charts in there. And some of these charts you probably would not have seen before, but don't worry, because neither have I until about 3 o'clock this morning. Let's get started. A quick snapshot of where we are today. We are a gold producer with our key asset based in the Philippines. In FY 2018, we produced 96,000 ounces at an all-in sustaining cost of $1,083. Just a quick note on the all-in sustaining cost. It's essentially an all-in cost, so we've included growth capex, project capex, exploration, and corporate cost in that cost. So when you do your cash flow every quarter, as we analysts do, the cash flow should reconcile with the cost after you have adjusted for working capital and tax payments, which is a nice feature to have in today's reporting environment. We are net cash and hedging free, and our enterprise value is quite modest, at just around $60 million. In terms of the register, it's almost half owned by institutions, the largest two being Rafa out of UK and Arbiter out of US. We only have one broker covering us, and that is Citi. First thing to note about Medusa, it's been around for quite a long time. So Medusa has been in continuous production for 10 plus years with a track record from our founding asset, which is another important point. So on the chart, on the bottom right-hand side chart, I've actually plotted out how long each company has been in production. But do bear in mind that a number of these companies have produced from a number of assets, including Resolute, who operated 9 operations, Troy operated 5, Zimbabwe, Ramelius all had multiple operations, and Medusa is still on its founding asset, and that's its only asset today. We currently have greater than 800,000 ounces in resource and greater than 300,000 ounces in reserves, and our track record of replenishing what we mine is highlighted in the chart on the top right-hand side as well. So. Importantly, the ore body is open at depth, and we are at about 500 meters below surface. That's the deepest level of development. So we'd like to think coal will continue to be a long-life asset going forward. Our capital discipline is reflected on a number of things. Firstly, despite having been around for 10 plus years, Medusa only has 208 million shares on issue, which is one of the lowest you can find amongst ASX gold producers. In fact, we haven't issued a single share in almost 5 years, which is quite strange, but it's true. The recent exploration and mine development expenditures were all funded internally. This includes our E15 service shaft, which is about to complete. In terms of the corporate cost, it's also quite modest at about $7 million per year, inclusive of community relations and insurance cost. Head office is located in South Perth. It's one of the most modest I've seen in my career. We have 8 full-time employees in the Perth office. Balance sheet as at 30th of June, we had 15.1 million US cash and gold and $6.5 million of short-term debt. We've added $3.6 million to the balance sheet in FY 2018. This is after expenditures incurred on the E15 exploration, paying some tax and debt as well. This is shown on the water flow chart on the bottom. Now, moving on to the asset itself, we believe coal is a quality asset. The word quality is always up for debate, but a few words starting with G seems to be fairly good starting points, and we can take a few off the list fairly quickly. In terms of geology, really straightforward, simple. It's ring of fire. We're just off the Philippines fault. There's a number of gold copper deposits in the region, and it's highly prospective. Grade, our reserve grade is 6.7 grams per ton, which compares very well with ASX underground operations, as you can see on the right-hand side. Our head grade at the moment is slightly lower than that, as a function of us taking ore outside the resource envelope. So where we have ore outside, that meets the cut of 4 grams per ton we usually mine. Oops. In terms of geometry, we have multiple subparallel veins that goes largely west-east, and that brings two benefits to us. One is the enhanced ounces per vertical meter profile of greater than 2,000 ounces. The other one is it allows us to mine multiple mining fronts, which de-risk the operational side of things. Depth, we've talked about before, so 500 meters is considered fairly moderate for underground operations, which we believe have positive implications for cost and mine life. In terms of metallurgy, again, very straight and simple forward, simple CIL, 95% recoveries, which is one of the best I've seen in terms of epithermal deposits as well. Despite having a quality ore body, our mill is really underutilized, currently running about 55% of capacity. This is a function of the mine infrastructure not being able to keep up with the mill. The right-hand side chart shows the daily production from a certain month, and usually where there's no production or there's a short buy, it corresponds to period where there's no supply. Now on the positive side, there's significant scope to increase production and reduce cost simultaneously if you can manage to feed the mill because of the high fixed cost. This can be achieved through improving the mine infrastructure, or more interestingly by potentially proving up and incorporating some of the regional satellite targets into the mine plan as well. Just on the exploration front, our tenements cover 410 square km, and it's very prospective. Within our tenement, there's a number of non-high-grade gold occurrences, most of which are located very close to the mill, as you can see on the picture to the right. In fin year 19, we'll be testing two targets. One is the Royal Crown vein, which is only about 3 km to the mill. The other one being the Durian target, which is only just off to the northeast of the existing mine as well. So a quick, this slide shows the Royal Crown vein project area. Early reconnaissance work, including underground sampling, have returned some fairly encouraging results, demonstrating the presence of high grade. The right-hand side picture shows the current drilling program we are going through, and assuming we are successful, we could have a resource on it in calendar year 19. In terms of evaluation, I think we are very competitive on a relative basis. So I've included a number of junior ASX gold producers and some two developers as well for this exercise. The two developers I picked have interesting projects in Asia Pacific, and I've also included the pre-production capex required to bring the projects up and running. You can see fairly evidently that Medusa compares quite cheap, and it's one of the lowest enterprise value within this group. To make the point a little bit clearer, I've also added this cheeky chart in there as well. So this compares Medusa's enterprise value against the ASX mid-tier gold producers' annual exploration budget. So it's quite similar. That's how much we're valued at presently, despite having almost 100,000 ounce production profile. Quick slide on the safety track record. Based on the actual fin year 18 production, based on actual fin year 18 performance and these two key industry metrics, Medusa compares relatively in line with peers. Just a summary on why I think Medusa is a good investment proposition. We start off with a modest valuation, and we have an asset that is both high grade and potentially long life. There's excellent growth opportunity given our surface infrastructure and the prospectivity of the area. I believe having this combination of having good valuation, quality asset, and growth potential is very rare amongst the ASX gold space. That's exactly what attracted me to the company as well. Thank you very much. Please come see us in booth 14 if you have any questions.